Hello everyone, this is Dan Hussey with RJO Futures bringing you our strategy of the day update for gold. Gold futures having traded into the 1130 area here in the current front month of a Feb contract. I am showing a daily continuous contract here, bar chart. This is actually a good indicator, good way that you get protected from using these fib levels, because this is a setup and an idea that didn't work, and it's important to look at what doesn't work as well as with what does, because there's something to be learned from all of that. So the rally and the trend that occurred throughout 2016 was more or less began last year in December, and we saw a rally into midsummer, and that was from the contract lows in the most recent 1060 area. That area subsequently led to a rally towards the 1388 highs, and a pullback off those highs began. We had potential for the market to actually hold a very nice three-wave structure into both 50% support and equal legs into the 100% line. Excuse me. I've highlighted those levels here with rectangles. So you had the full 50% retracement as well as equal legs. They didn't quite line up, but they lined up enough to where there was overlap in their kind of the quote-unquote inflection zone, or the area between 50% and 61.8, and the area between 100% and 123.6% on the 50% line, and equal legs respectively. So gold actually traded lower. It broke through these levels. It didn't give any sort of reaction towards technical first targets, towards 38.2 lines, or back towards the 78.6 for the 50% and 100% lines, respectively. And we broke straight through these levels. I've had a number of discussions with traders about how there was opportunity to buy gold, and now because of invalidation of this, any kind of subsequent rally here can actually be sold, but generally speaking, this is what we call a failure in the trend. So we had a failure in this uptrend to continue. We have downtrend taking over and breaking technical support levels, giving way to basically the bears being in control. Full 50% retracement shorts off the highs. Traded into a 61.8 line, but arguably traded lower off of their inflection zone. And we're able to actually break the counter trend long, or any kind of 50% long off the lows. From a low to low extension here, drawn from the 1250 lows to new lows, you have continuation resistance into the 1185 area. So any kind of bounce here, in the short term, I'm going to be looking for resistance into the 1185s and for continuation down towards 1100. That 1180 area and potentially a break really below 1124 below the lows are going to bring up a test of that 1060 support level that is the current kind of multi-year low for gold. And the truth is that we're closer to that than we are to prior resistance at this point in time, or prior support that could be tested as resistance up into 1250. And so I definitely, in the camp of I believe we're going to see, and in my opinion, we're going to see gold head down and test towards that 1060 area. And if there is an opportunity to be a seller or find resistance, we can find some technical levels that help with that idea. So not every trade works out. This is a good example of recommendations to be buyers in that full 50% to 61.8 line where it fails, but it's also why we can use these levels for invalidations of trends, and they give us a tight, concise trade. Trading's a game of numbers. It's about statistics and probability, and finding areas in the market that give you the highest chance of success, but also curbing risk. And in using this type of style in trading, where we enter into trades at resistance lines, use invalidation lines for stops, and find target areas to take profit, you're able to create a full, concise trade plan that defines your risk, where a stop should be, where you want to get away from the market, and when you stop participating. It also gives you an area that you participate on, right? Because you could have been a buyer the whole way down in gold and got burnt. But instead, there was one very clear trade to take. It failed. It didn't work out. And now you look for the next opportunity, which in this case could be for selling. So with that being said, I'm Dan Hussey with RJO Futures, and I'll be back with you as price action develops. Take care.